All right. Good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation of how to create high probability option strategies by predicting where a stock is headed. Presenting today is Sandy Chaikin, co-founder of Chaikin Analytics. Now, throughout our presentation, be sure to submit your questions through the webinar using the Zoom Q&A window, which can be accessed in the upper left-hand corner of your screen. I'll be available throughout the presentation to respond back to your questions. As a reminder, this webinar is being recorded and a copy will be sent to everyone who is registered. Now, please note that Chaikin Analytics is not registered as a broker-dealer or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. Now, with no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy presents at Nasdaq and industry conferences on fearless investing. Now to get us started, here's Sandy Chaikin.
For attending today's presentation. Actually, Joe is going to be chiming in because he is one of our in-house option experts. So he's going to be participating as well as me in the presentation today. So when we get started, I always like to start with kind of framing the conversation. You know, what is it that we're dealing with as investors today? And the biggest challenge is really how to overcome this underperformance history that we seem to be ladled with. I'm sorry, I'm not looking for the right word, but anyway, it's how to overcome the underperformance that individual investors have been experiencing for the past 20 years. So you have an average of 10% a year on the S&P 500 for the past 20 years, which is pretty good. As we all know, last year was a exceptionally high year, closing the year at 21% increase, which is awesome. However, individual investors only average a 2.5% increase a year on their portfolios when they manage it themselves, and primarily because people buy on emotion, not fact. So today's presentation is about giving you the facts so that you can instill these into your methodology and start trading and investing more profitably based on fact, not emotion. In addition to individual investors underperforming the market, actively managed mutual funds also underperform. 81%, the research shows, underperform the S&P 500. So that that really narrows the field of options. Where do you put your money as an individual investor? Well, our solution is to invest it yourself in stocks, and we're going to show you how to do that. But whether you invest in stocks for the long or the short term, you first need to know where that stock is headed. So the ability to actually predict with a high probability where a stock is headed is critical, whether you're trading options or whether you're investing for the long term. So the stocks that you see here, Apollo, Lam Research, Applied Materials, these are all in my portfolio. I hold, now it's about 12 to 15 stocks at any given time. And the examples I use in these presentations are, for the most part, stocks that I hold. I don't hold Under Armour or Advanced Auto Parts. As you can see, why I don't hold them. They're down 35 and 50% respectively. So no, I don't want those in my portfolio. However, they could be good candidates for a put option. But knowing where that stock is headed and being able to feel that way with a high probability is really critical. Okay, so you're about to discover how to predict where a stock is headed and create high probability option strategies. This is just one of the kind of a little teaser copy of the stock charts that we're going to be looking at today from Chaikin Analytics. And basically, in order to follow these charts, really all you need to know is green is good. You can see those three kind of lines on the bottom, the power gauge rating, the relative strength, money flow. If these all three are green, that's good. If there's all red, that's bad. And why do we invest in the stock market to begin with? Well, many of us prudently set some money aside for our retirement plans. However, it's important to celebrate along the way as well. So I've always been a big saver, but I've learned to kind of loosen up a little bit and spend some of the money enjoying things that Mark and I like to do together, primarily traveling. So based on the profits that I've made in my account since I've started trading with Chaikin Analytics in 2012, we've been able to take some pretty fantastic trips. We've gone to Turkey and Istanbul. We've gone to Vail, Colorado. We've gone to Rome. We're going to Florence and other parts of Italy in the spring of this year. But think about where you want to spend some of the money that you're going to be making investing in stocks. And Joe, I think you're not on mute. If you don't mind just putting yourself on mute there. Or Chris, maybe. Okay, so why should you listen to me over the next hour or so? Well, because I've beaten the S&P 500 since I started investing in 2012, and 4 out of 5 pros do not beat the S&P, then by correlation, I'm beating the majority of professional investors as well. So if my motto always is, I mean, I don't say this to brag, I say this to be authentic to you in believing in yourself, that if I can do this, you can do this. I started investing in 2012 with stocks that I knew of, like eBay, Yahoo, Southwest Air, Skyworks. And then in 2016, I got into a number of these small cap stocks. I found a number of great small cap stocks that traded in the triple digits. And last year, I've had some big winners like Apollo, Lam Research, and D.R. Horton. So these have all significantly outperformed the S&P 500. And I do this spending 10 or 15 minutes a day managing my portfolio. So let's take one step back for a minute and look at how I got started investing in the first place. In the 70s and 80s and 90s, I worked in New York City for Elizabeth Arden, L'Oreal, and then moved to Philadelphia in the 90s working for the Franklin Mint. They all had 401k plans, which was great. And the choices were mutual funds. And so I invested in mutual funds managed by Peter Lynch at Fidelity and Bill Miller at Legg Mason, and they did really well. I really outperformed, only by selecting a good mutual fund. However, as the portfolio grew and as my career got busier and busier, I felt a lack of confidence about managing it, that I felt I had just gotten lucky, but that at this point I should really turn it over to a professional to manage. And that was pretty much my upbringing of relying on professionals to help you in areas where they had expertise and you didn't, like an accountant or a lawyer, or a doctor for that matter. So it was perfectly logical to turn this over to a wealth manager, and the things went okay for a while. What he first did was sell the mutual funds that I was in and put me in 8 or 10 of his choice, and they did okay for a while. But then when 2008 rolled around, obviously everything changed, and I continued. I started calling him. It's like September of 2008. I can remember exactly where I was when I made that first call, saying, this is not going well here, and it's pretty evident that the stock market's going to continue to, fall. Shouldn't we just get out of these positions now and set the money aside? And the answer I always got, because I did call repeatedly, was no, just hold on, they'll all come back. It's better not to sell. And because I lacked the confidence and felt he's the professional, not me, I said, well, okay, I'll do what you say. You know better than I. However, you know, when we got to the spring of 2009 and things were not getting better, they were only deteriorating. I was down now over 40% in my portfolio. I just took back control and said, I've got to do this myself. But that was a pretty devastating moment for me. And it really taught me a lesson that nobody cares more about your money than you do. And this is my future. And this is my money that I worked over 30 years to set aside. And I gave up a lot to set the maximum money aside that I could. And then to see 40% of it disappear practically overnight was really heartbreaking. So really one of the reasons, the main reason I'm here today to speak to you is so that I give you the tools and the confidence and the wherewithal so that you can also do this yourself and not rely on someone else. And even if you do rely on a wealth manager, and we totally support that, and we have many wealth managers as our subscribers and members, we still feel it's important for you as an individual investor to have a seat at the table, to partake in the conversation, to be knowledgeable enough to say, well, wait a minute, I'm not sure I want to invest in that stock. Don't you? It's got a bearish power gauge rating. So keep that in mind as you're listening to the presentation, because it's really important for each of us to take control. And once I got over the hurt and the devastation and the anger, then I became resolved to just take control and do this. And fortunately, that was shortly thereafter when Mark and I started the company, and Mark gave me the tools so that I can now do this myself. By the way, I don't tend to talk to him about the stocks that I own. It's easier as a married couple just to keep my money separate and keep my decisions mine and his decisions his in terms of investing. So for those of you who think, oh yeah, easy for you to say, Sandy, Mark tells you what to do. No, that's not the way it works in our family. So rest assured that I do this myself, and you can too. That's really the message I want to give to you. So I know many of us are facing challenges today in investing, and I just want to pause here for a minute, and Joe's going to put up a little poll. I'm going to ask you to do a little bit of thought thinking right now and think about the challenges that you're facing. What gives you pause before you hit that buy button or before you hit that sell button? And Joe's saying here, you can list as many or check off as many as apply. But let's just take a few minutes and see what you all are feeling.
Mm-hmm. Yeah, you can all see a good number of options in front of you. These are all responses that we've heard from a variety of different interactions that we had with our users and webinar attendees before. But let us know. You can select a variety of different options here, whether it's lack of education, emotions getting in the way, information overload, just to name a few. You'll see them all listed there. So feel free to select as many as resonate with your current position. And we'll look at the results in about 20 seconds.
Great. Thank you, Joe.
Mm-hmm. And all right, Let's see. I think, yeah, let's go ahead and call it there and take a look. Bear with me for a moment. And a pretty common one that we see, Sandy, timing.
It's always number one by a long shot. 70% of you checked off timing. That's typical. Information overload, that's another common one. And I see that's like number 2. And then we go to what? Emotions. Yeah, emotions are always high. That's number 3. Fear of loss. Yeah, fear of loss is in there too. That's almost like that's kind of tied in with emotions, fear, emotion. So that's kind of combined, but that's great. Thank you all for partaking of that. That's really helpful. Joe, thank you. Okay, so we've anticipated those replies because, as Joe says, it's pretty, it's very consistent with what we found when we asked this question at other presentations. So timing is always the biggest one. When to buy and sell, fear of loss, trading on emotion. You can see I clumped those together, and those were both your number 2 or number 3 contenders here for challenges, and information overload. So I got your top 4 right here. So I've already built in the solutions to your challenges into the presentation. So as we go through the presentation and the various steps, I'll be addressing your challenges. So we're going to address these 5 steps. You know, how do you predict where a stock is headed? First of all, you've got to have tools that you trust. You've got to know how to identify a classic bull, and you've got to know how to identify a classic bear, because if you don't know where a stock is headed, you're not going to be a profitable investor. So that's critical. And then how do you find these? Okay, once you've identified what is the look of a classic bull, how do you find that? And how do you identify those losers before they become losers in your portfolio? And then timing, of course, that's your biggest challenge. When do I buy and when do I sell? And I'm going to give you some very clear-cut guidelines that I follow that have served me well. So the examples and the charts I'm using are from our Financial Freedom Fast Track, which is powered by Chaikin Analytics. It's the platform you see here. And you can see that it's on desktop and iPad. So let's jump right in with the first step. And that is to use tools that you trust. Now, I talked about the 2008-2009 meltdown, and that was about when Mark and I were coming together, and he could see my distress from having lost that 40% of my portfolio. Mark was in retirement at that time, and he had sold his company to a division of Reuters and had been retired for 10 years. And he saw what was going on, you know, with the turmoil in the markets and the lack of trust in Wall Street, and the billions of dollars, literally billions of dollars, that were coming out of traditional brokerage firms like I had, and going into self-managed accounts like I set up for myself at Vanguard. So he said, you know, I've spent 40-some years on Wall Street creating tools for institutional investors so that they could invest their clients' money better. I'm going to take that same knowledge and boil it down into a system that you, Sandy, and individual investors can understand, because you're now on your own. I mean, I now had my account at Vanguard, but you know, there was no one to ask questions about investment strategy, or what should I do about this stock or mutual fund or whatever. So he said, I'm going to give you the tools that you need to make those decisions, but they're going to be displayed in a way that's simple enough that you can understand. And that's what he did. So he basically took the 200 factors that affect the price of a stock, and over a year he tested those 200 factors to find which were the most important factors. And he boiled it down to 20 factors. And you can see here, those 20 factors are rolled up into a very bullish or a very bearish rating, as you see here, which looks pretty simple, but there's a lot more going underneath the surface than meets the eye. And that's those 20 factors that are kind of down below the surface, churning away, building that algorithm. Okay, so here's the 20 factors that are rolled up into basically 4 components. And rather than looking at information on the right, which is pretty complex, which I would not begin to make heads or tails of, Mark has taken that and put it into a display, as you see on the left. So you see here, this is AMAT back in June with a very bullish power gauge rating. It's pretty simple to understand, isn't it? And it's made up of those financial component, earnings component, technicals, and expert opinions. Cutting through the clutter, so you don't have to look at those sheets of data and numbers on a spreadsheet and figure out how to put them together. Well, John Carter, who's excuse me, a partner of ours, and I know a number of you are also followers of John's on the presentation today. It got his attention, and he likes that it includes 20 technical and fundamental factors to anticipate a stock's profit potential. And remember, the topic of this webinar is how to predict where a stock is headed. And that's exactly what the Power Gauge rating does. It looks out 3 to 6 months and says, this is the direction this stock is likely to take. And it's right about 70% of the time. And as one wealth manager said to me, well, I only need to be right 51% of the time. Well, you're going to be right a lot more than 51% of the time when you're using the Power Gauge rating as your guide. But think of it as a GPS for stocks. It tells you where that stock is headed. So what are those 20 factors? Well, here they are laid out here. Now, the financials, for instance, are used more heavily perhaps by an investor like Warren Buffett, whereas like a Jim Cramer focuses a lot on earnings and technicals. He loves a Chaikin money flow. Expert opinions are really our secret sauce. These are factors factors that are going to be difficult to evaluate and find elsewhere. And this is kind of our secret sauce. This is what really makes the Power Gauge stand out in terms of uniqueness, because it rolls up all of these 20 factors. So you're not out there researching this for every single stock. It's all rolled up for you. But if you want to drill down and get a Power Gauge rating on any one of those 20 factors or 4 components, as you can see on the left, it's readily available with a click of your mouse. So why models? Well, this gets back to the whole challenge of being humans, and as humans, we have emotions, and they get in the way. But models don't have emotions. So a very well-known analyst says models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. So keep that in mind. You know, that's why it's so critical to use a model and based on fact as opposed to emotion. So to give you a little confidence in the Power Gauge rating, we have partnered with Nasdaq. We've created 3 indices with them back in 2014, all of which have substantially outperformed their benchmark. That got the attention of New York life insurance companies, Mainstay Investments, who have now licensed those indices, and now money managers and their clients can invest in a portfolio of stocks based on the Chaikin Power Gauge rating. So it's not just us saying this is a reliable, this is, you know, time tested in the marketplace with very substantial financial institutions saying this works for us. It's also used by the pros, hedge fund managers like Soros and Paulson, and the media is continually talking about the Chaikin Power Gauge rating and interviewing Mark practically weekly on CNBC. And we were in Barron's this last week with the small cap ETF that Index IQ has launched. And we were up there as the second most successful ETF, launched in 2017 out of 120. And we have over 370 million in assets in that ETF that was launched in May. Now, we're not licensed, so I'm not saying this as a recommendation to buy it. I'm just strictly giving you validation, and it is in print in that Barron's article if you want to check me out. Okay, so we get a lot of testimonials from our subscribers. Marie gave us this very recently. She said never in a million years did she think that she would become a passionate investor in her retirement. But Chaikin Analytics made that happen. And that was after watching a number of my webinars. She felt that she could learn this procedure too. So it turned something that was fearful for me particularly, and for Marie, something that I dreaded and felt this is far too complicated for me ever to learn this. But now I love it, and it's fun. I look forward to it, and I look forward to those 15 minutes a day when I'm really going through my stocks and evaluating my potential. Okay, let's go on to step 2, which is how do you identify a classic bull? If you look for this pattern as a setup, this will tell you whether a stock is likely to outperform the market over the next 3 to 6 months. And if you're trading options, you need to know that. If you're investing for the long term, you need to know that. If you're a swing trader, you need to know that. So let's go through. I'm going to show on the next couple of charts I'm going to point each of these 4 things out so that you'll see it on a chart. But keep this in mind, if you would, when you're looking at the upcoming charts. This is a chart, or basically a diagram of how a stock moves, that Dr. Wykoff put together some 95 years ago when he was teaching classes on investing in the stock market. And I call this like zigzagging. There's a lot of terms here: accumulation, breakout, reaccumulation, etc. But basically it zigzags across, it pops up, it pulls back, it pops up again, goes across. And this is, if you understand that this is the way a price moves as opposed to straight up or straight down, this will help you enormously with your timing. Because, Joe, maybe you want to just pop in here for a minute and address how this can help you as an options trader.
So as each of you, the majority of you mentioned during that first poll question, timing, not just getting in at the right point, but also getting out is your biggest challenge. And that is definitely consistent with what we hear most often. What I love about this chart are those bottom points. I like to think of this chart, it's kind of like a pattern of 3 steps forward. Perfect, exactly. And then that 1 step backward into the point that Sandy is hovering her cursor over. And those inflection points are huge for directional options trades. If you have this concept in your mind and you have something like the power gauge rating that can lead you to stocks that are likely to follow this zigzag pattern, then that's your first step to not just identifying the right time to get in, but eventually also the right time to get out.
Perfect. That's great. So thank you, Joe. That's really helpful. Mm-hmm. Okay, so let's put that into practice. This is a stock that I own, Columbia. It's up 29%, since the power gauge rating turned bullish. So let's break this chart down. The bottom ribbon here, you'll see it says Chaikin power gauge rate. Chaikin power gauge starts out as yellow, neutral, turns to bearish, neutral, and you can see around August it starts pretty consistently going to green, which is bullish. Remember, this is those 20 factors rolled up. This is the most important thing to look at when you look at a stock. Everything else is 1, 1, 1, 1. This is 20. So it's got a huge relevance. Right above it is relative strength. So what this tells you, it's this red-green heat map. When it's red, it's underperforming the S&P 500. When it's green, it's outperforming the S&P 500. And why is this important? Well, if you want to find these double-digit and triple-digit winners, like Lam Research and Cigna and AMAT, you need to outperform the S&P 500. If you're content with the average return, which has been 10% over the last 20 years, 10% a year over the last 20 or so years, that's fine too. It's better than putting your money in cash. But if you really want that big outperformance, you've got to go with individual stocks, and you've got to go with stocks that are going to outperform the S&P. And so you want your relative strength here to be green. Money flow, I'm going to come back to overbought, oversold in a minute, but let's hop up here to money flow. This is the indicator that Mark basically made his name on Wall Street with when he created this 35 years ago. And this indicator tracks the money coming into and out of a stock. So it's the institutional buying. When you see these mountains of green, that means the institutions are buying. When you see them go red, they're selling. And this is important because this helps move a stock price. You and I don't buy in a big enough volume to affect the market. But institutions trade in such huge volumes that by selling, they can basically be dumping a stock and cause that stock price to go down, which is what you see happen to Columbia in September. However, when institutions are buying, they're putting more demand on that stock, and it bumps the price up because the stock is less available. And it's basically, think of supply and demand. This measures supply and demand. And you can see when these big chunks of green are in here, money flow, say from, what is that, September through December, almost into January, you can see what's happened with the price. It just goes up and up and up. Now, you can see it's leveled off now. A little bit of money flow is coming out in January. That's typical. You can't expect it always to go up, but this little bit amount doesn't really affect my decision whether to hold on to the stock or not, or sell it. I would never make a decision based on that little bit right there. But you can see that the stock now does level off in price. So when you've got everything else equal and money flow goes negative, you can expect it to go sideways a little bit, and think of that Wykoff chart. Timing. Let's get back to Wykoff now. The timing, let me go back here. Okay. Look at this again. Try not to look at all these words. They get kind of confusing. But just look at this black line, the way it goes up and down and sideways. And look at here, okay? This overbought, oversold indicator is measuring that up-down movement. So this really helps you smooth out timing. This is hugely advantageous for timing. Why? Well, you want to buy a stock when it's zigzagging down here, as you can see it was in like September and mid-October, mid-November, and you can see each time it correlates to this dip here. A stock will always pull back. It will never go straight up. So the key is, if you're buying a stock, say like I did here in September, with this green buy signal here when it triggered, but you can see it correlates to this dip down here, which is called oversold condition. And so that's when you want to buy it. You want to sell it when it's going up here. And you can see after reported earnings, it spiked way up, and that correlates again up here. So using this to help you time is really helpful. Let's look at another stock. This is Biogen. This is a stock, I don't own this stock, but Mark puts out a weekly market commentary for our subscribers every Sunday night. And he recaps the market. He anticipates what's going to happen in the incoming week. And he also focuses on some individual stocks, primarily one being what he calls a stock of the week. So he featured Biogen a couple of weeks ago. It was the December 31st issue. And he featured that at 318 with this oversold buy. So, Joe, do you want to hop on now and just speak to that recommendation that Mark made?
And here's the great thing about this. The reason why Mark had his eye on this opportunity is, obviously we can all see the buy signal coming into play here, but everything lining up, a great power gauge rating, great money flow, and ultimately results in an oversold buy signal. So think back to those inflection points, back to the Wykoff chart that we were just looking at. When you're able to spot a setup like this, it gives you the right idea for timing. And ultimately, from this point, from the time that Mark made his recommendation, the stock gapped up 8%, the price up to $344 in just 5 days. Now, if we go on, I think on the next slide, we have a reference to the specific setup here. You can see the stock trading at 318. And Mark actually put out a specific vertical call spread. So it was a 320, 350 vertical call. Obviously, you're buying the call at 320. You're selling it at 350, so closer to the upper range. Now, Mark said here, if the stock rallies up 10% by the February 16 expiration, position would yield 200% gain. Now, on the next slide here, we have a screenshot of our options play program. And in this case, we were looking at the stock going all the way up to 344, not quite at that 350 call that you were selling, and that's totally okay. At that point, you were up at a 75% profit in the trade. You don't really need the stock to get all the way up to 350. I think all of us would be perfectly happy with a 75% move in the overall trade. And so, and I should tie that back too. I know really within the details, you might notice that we have some volatility bands on the program. When you use the upper volatility band as your target, you can set the proper expectations. And so in that case, let's go. You can see that here. So exactly right there where the price gets up to that upper band, that's your, that's your initial target price for the stock, exactly right up there. And so that plays in very well with your spread. And then ultimately, again, the stock made its move much, much quicker than you would typically expect. And so that puts you in a great position where you can start having a conversation about those exit points. So you get in easily, the exit points then, I always tell people, your exiting strategy has become much, much easier when you have the right entry strategy. And here you have your buy signal, great representation. I love Mark's stock picks because he's always putting in ideas for that you can use for other trades. So you have your entry point, you have your exit point. This leads to a very quick move in a short period of time. And then you find yourself in a position where you're managing just how profitable your trade will end up being, not whether your trade will be profitable at all. So it's a great position to be in.
Great. Okay. Thank you very much, Joe. And this, by the way, Options Play is an overlay on the Chaikin Analytics platform. It comes bundled into the subscription at no extra charge. And Joe and his colleagues give individual webinars, twice a week, Joe? On how to trade options?
Yeah, twice a week. In fact, my next one is tomorrow at 11 o'clock Eastern time. We record every session we do for our subscribers. And yeah, we go through situations just like this Biogen setup, all about finding. I see there was a question about how do we find stocks like setups like Biogen. I cover that all within our session. I like to use our screener. So again, my next one, it's just for our subscribers, but it'll be at 11 o'clock Eastern time tomorrow morning.
Okay, great. Thank you. Okay, now let's go to Best Buy. This is another stock that Mark talked about back in May. They are, as you all know, bricks and mortar. You've probably all been to Best Buy to check out your TVs or any other electronics. And some of you then go online and buy them. But for some reason, they have been able to kind of beat back Amazon and stay in business. And Mark recommended this back in May on a webinar right before they reported earnings. So Joe, I'll let you take over from here. I see my little purple thing stayed, but I guess I'll try to take that off.
If you see a remove drawings option, maybe I'll sneak in there once I finish up in this section, but yeah, it's okay.
Let me get you back. Sorry.
Sure.
There you go.
All right, so
okay.
This is great. We're looking at an earnings idea here. We're right on the cusp of earnings season. So again, we're looking at a Best Buy, which again, brick and mortar. Geez, I used to go to Best Buys, several years ago, and I haven't been to one in a really long time now. But looking at the stock, it's a great example of not letting the perception of a company get in the way of looking at a profitable opportunity. So this was a recommendation from Mark. It's a bullish call spread back in May. So it's actually, he mentioned it on his May 24th webinar, just the day before earnings. And that's enough. I know some people get concerned about a volatility crunch, but really just the day before earnings, plenty of time. It's all really about finding the right stock. So again, with a spread, you're limiting your risk. I don't know if that went over anybody's head on the previous example, but obviously you're buying a call and selling a call. So you're covered on both sides and you're limiting the risk involved in a given trade. And we all know how volatile earnings can be. So again, we're looking at the stock here. It just so happened to be in an oversold position, triggering an oversold buy signal, getting it on our radar, which is great.
Dipping down here.
And what's great about it is you can look back and see that Best Buy had a pretty good history of earnings. 3 months prior to this, you can see the EPS, and it's in that green text right there, telling you that it beat expectations for the past 2 quarters. And you can see, and even the quarter twice before this one had a major gap up. So we see that the stock has a good history of this that kind of gapping. So stock reports, the price went up 20%. The spread widened. If we go to the next slide, let's see. All right, now in this, let's see.
Oh wait, that's Biogen.
Yeah, no, that's fine. Yeah, let's see. Where's our Best Buy one?
Yeah, sorry, I got the wrong way.
No problem.
Here you go.
Perfect. Here it is. Okay, great. So look at the compare the verticals here. So the vertical with the options play score, it's a nice little quality rating for the options strategy. The one that Mark was recommending had a score of 104, which is really good. It's like having a bullish or a very bullish rating for the trade. And it's great. The cost at that time was only $247. If you wait until after earnings, you're looking at a premium that nearly triples. So that results in a huge profit for getting in the trade beforehand, and then ultimately results in, again, you're getting in before the price skyrockets. And in fact, obviously, you're profiting significantly. So this is a great example, since we're right on the cusp of earnings season, of how to find the right stock at the right time. And then you use this wonderful options play program to set up the right trade. The two go hand in hand so well.
Great.
And here's, of course, the beautiful thing. So speaking of results here, obviously it's great to show these past examples, but when we get responses from our users, from our subscribers, this is really the type of experience we want people to get. So we got an email here from Frazier telling us he made 257% in 24 hours and on an earnings trade. Gave options one more try. He said he had been trading options before, wasn't doing too well, but he wanted to give it a try with earnings here. Surprised by the results. Best Buy options trade, biggest winner. I don't think I would have ever attempted an earnings trade without the guidance on your webinar. So always love seeing these types of emails come in, and it's really just about using the program intelligently. It's great tools used in a great way, and you get great results from all of this.
Great. Thank you, Joe.
Mm-hmm.
Oh, here's one more.
Oh,
one more testimonial about using options play and having a 90% average return in his first 6 earnings trades using options play and the earnings features, just what Joe has been talking about. All very simple. So instead of getting bogged down in due diligence, I was trading, right? You're not
beautiful.
Spending all your time doing the research. All right, Joe, I am going to need your help to get rid of that little purple gremlin in there.
I'm going to take that out.
I could put him, I won't do that again, sorry. Okay, so we've identified a classic bull. Now let's look at how to identify a classic bear. And it's basically the exact opposite of what you've seen on the bull side. Let's first again start by Dr. Wykoffs chart, which is the same pattern of zigzagging across, but instead of zigzagging up, it dips down, pops up a little bit, and dips down and across and sideways, etc. So we all like to go with what Warren Buffett says. He's he was on CNBC a good part of today. He always says, avoid risk whenever you can. And Joe's here trying to get my little purple job off. Thank you, Joe. Avoid risk whenever you can. And avoiding risk is just as important as finding those big winners and getting those big hits, because the big losses can really destroy your overall performance. So let's look at how you do that. Okay, so Chipotle is kind of a poster child for a stock you don't want to own, or if you do own, you want to be betting on the downside and trading put options. But it's been bearish really since last June. Bearish relative strength. You can see that red heat map here on relative strength, and look at the money coming out of this stock. And you can see what happens when these three things line up and they all kind of go in the same direction. The stock goes from a high of, what is that, about 480? I know it was up to, 500 up here in May, and it sinks all the way down to what, the 200s or so. So I think it was 263 at its low. So you don't want to ride a stock down if you're investing on the long side, but you can put on some really profitable put option positions with that, particularly using these sell signals. Joe and I have been pointing out these little triangles, green for buy signals, red for sell signals. And we have basically 6 pairs that trigger when different criteria are met. These are triggering because the money flow is coming out, and you can see it is coming out there big time. And you can see what happens to the price when they all line up. It just kind of catapults down. Another example is Under Armour. This stock is had a 65% move from peak to trough. It's gone from $31 all the way down to $11. And you can barely see up here, way far left, just opposite this 1-day icon here, there's a red triangle. Selling it way up at its high at what, 32? That must be the high of 31, 32. Right before it had this big drop. So these are powerful, and these are powerful to use whether you're trading short positions, put positions, or of course, long positions, and using those buy signals to guide you when to get in, and sell signals of when to get out. And last but not least, let's look at Advanced Auto Parts. This is another big loser. It's gone from 177 to 79. Down 55% this past year. Power gauge turned bearish back in April, right around, back in February, really. Back in here when the stock was up at around 160 or so, and it's now trading at 110. So again, this is one that Mark recommended putting on a put spread. And Joe, maybe you want to take over from here and explain Mark's position.
Yeah, so bear with me for a second. Okay,
Sure.
So for Advanced Auto Parts, this is a great example, of course, on the downside. You can see throughout the page, whenever I pull up a stock example and I'm seeing an overwhelming amount of red on my page, this is telling me it's probably a good short candidate. And that's just what Mark was thinking back in September on his webinar. So this was a recommendation, a put spread, so looking at a put vertical in this case. And the maximum profit in this case is if the stock were to drop down to $85 or below in just 1 month. Now, we have the relative strength sell signal there, where we've seen some oversold buys and sells, where now we're looking at relative strength buys, in this case, obviously sells. Those are 2 great signals for swing tradings and finding those inflection points from the Wykoff chart. Now, what's great about this is that you have the ability to profit on the downside with, again, limited risk. There's only so much in play at this point. So again, we're looking at the stock. The signal came in at a $97, almost $98, and you're looking for the stock to drop to 85 or below. Obviously, with a bearish power gauge rating, with mostly weak money flow and really bad relative strength, you've got a stock that looks just like that bearish Wykoff pattern here. The odds are really on your side that the stock is going to move in your favor. So remember, the whole theme of this webinar is using stock analysis to benefit with your options trading. This is a great representation of that. Now, obviously today, looking at the stock now in January, I wouldn't be thinking about this trade in the stock, but this is the kind of setup that we like to find. And so back in September, it's a great type of setup. We recommended the put vertical, again, buying a put at a $100 strike price, expiring in October, slightly in the money. That's usually what options play defaults to, going slightly in the money. You can see the trade here, the cost only being $475 for the overall trade, with a great options play score. Again, anything over 100, you can kind of associate that with being a strong recommendation. And then you're selling that. You can see it's an 85/100. So you're selling a put at 85 against it. And that's really where you're benefiting on the other side. The overall potential here is great. Yeah, so Sandy's highlighting the potential nearly $1,000 if the stock dropped from 98 to 85 in 4 weeks. The risk, again, just $475 for a potential profit of $200. And in this case, you saw, let's go back to the chart real quick. You can see that the stock really started to trickle down, just slowly and gradually all the way down to that oversold position, just like our Wykoff pattern. And just like that, you're looking at a 200% profit in the span of 1 month. And in fact, sometimes even less than 1 month. So it's a great type of setup. You can see that blueprint that is the Wykoff chart coming into play. And then here you can clearly see how Chaikin Analytics will lead you to those stocks, and you can set yourself up with the right options trade.
Great. Thank you, Joe. Here's another happy subscriber. Been trading stock options for many years, but without much success. On January, this is exactly a year ago, I found your system. Started the year with 235,000. As of today, which was July 30th, my net liquidation is $1.2 million. I would not have been able to achieve this without your system. So
This, yeah, Sandy, if you don't mind me jumping in anytime,
please,
we obviously love this testimonial because you're seeing some eye-popping numbers here. This is from Ken, who everybody, the three of us here on our support team have all spoken to. Ken's a great user of ours. He's done extraordinarily well. And I just wanted to jump in to really emphasize that this is a true testimonial. This isn't anything that's being doctored up. These are all results that we've seen and lessons that have been applied from the options webinars that we host for our subscribers. So we're very, very proud of the results that we get back from our users.
Thank you, Joe. That's great. Okay, so let's move on to how do you find these? How do you identify the losers and find the winners? Well, we have what we call a discovery engine, and think of it as a Pandora for stocks. You seed it with a stock. In this case, you can see I've seeded it with DHI, and then it will give you stocks like DHI. So you can see back in December when I did this for a presentation, I got other stocks in the building and construction industry group, and Lennar stood out to me. You can go chart by chart and see their more detail. But this is a great tool for finding stock ideas because I had owned, I'll show you, I had owned DHI. I'd bought it down here at this buy signal and sold it up here. I made a nice like 30% profit. But then when I got out of it, I was like, oh, damn, this stock is just still going up. I think it would close tonight at 53. I wish I hadn't sold it. So I said, okay, well, maybe I can just get back into another stock in the same industry group. And that's exactly what I did by identifying it here with Lennar. So here's Lennar. This was yesterday. And this yellow arrow shows you where I bought it, right around December 13th when I gave that presentation. And this was the buy signal that triggered. And I said, okay, good, I'll get in on this one. And this has been really good. This has had a nice run. So I dropped the power gauge rating menu down from the desktop app yesterday so that you could see how the earnings component was looking. And you can see by the arrow here, it was showing up very bullish. And I knew also, because the chart told me that they're going to report this morning, Sun meeting before the open. So let's look at this. Green power gauge rating, green relative strength, green money flow, and a buy signal. That was a pretty good testament to buy, right? It was telling me money flow's coming in and it's dipping down. It's oversold. So the timing was right back in December to buy that. So let's pretend you don't know what that stock did today when they reported. And let's ask you, if looking at this chart, now that you've seen a number of charts, is this a stock you think you would have bought hoping to get a pop on the earnings? I draw your attention to the past EPS. That means they beat. If it's green, they beat analyst estimates. When they beat estimates, they tend to spike up. When they disappoint the estimate revisions, they tend to spike down. And it took me a while to understand that these ratings aren't based on how they did compared to the last quarter or the last year's quarter. It's how well they perform based to the analyst estimate. That's the all-important measurement. So, Joe, do you have a little poll to put up?
Yeah, let's take a look at this one. So
awesome.
We've been through a number of different examples already, and let us know what you think. We've seen a couple of great types of setups. Remember, we're right on the horizon of earnings season. Obviously, stock selection itself is a huge challenge, let alone timing. But let us know what you think. Is this a stock that you would consider before earnings? And again, this is, of course, assuming that you do trade earnings. I know perhaps there's probably a number of you who don't trade on earnings. I've encountered people like that before. It's just a little too risky. I completely understand a situation like that. But let us know if you are open to earnings trades. Let us know what you think. And we'll give that about 10 more seconds and we'll take a look at the results.
I myself look for that because I love to trade on the earnings volatility. It gives me a great opportunity to make some really quick short-term profits.
All right. And let's take a look at the results. And we've got a slight favor in favor of yes, buying before earnings. If you said no, let us know why. I see there is a comment here, someone mentioning I've been taught never to trade around earnings because of volatility. Again, I understand that point. If you're just not in for earnings, that's completely understandable. But let us know if you're somebody who responded saying no. Be happy to shed some more light on our position.
And let's look at what it is today. Okay, so that was yesterday's stock chart. This is today's stock chart, and I did the drop down on the one-day price. So you can see the stock was up today. It actually closed over 2% up. Interestingly enough, it did disappoint, but there's a reason for that. It changed the timing of when it booked a profit, moving it out into 2018 to take advantage of the Republican legislation. To get a lower tax rate. So it's not that the company is doing any worse, they just moved some of their profits out. And I guess Wall Street understood that and didn't punish them for not meeting the analyst estimates. So what I say in trading around earnings is that with these tools and with this last breakdown, and you can break this down into the 5 factors, you can see the actual power gauge rating on the 5 factors that make up the earnings component. You can get a pretty good sense with that and with the previous history. And I even flip on to the 5-year chart. This isn't live, so I can't do it here, but I flip over to a 5-year chart. And if the company has been successfully, like for 4 or 5 years, beating analyst estimates, there's a pretty good chance they're going to beat this one. And 9 times out of 10 they do. So I see this as an opportunity. As Joe says, it's obviously your call, but keep that in mind when you're considering it, that it can be a very profitable, short profit way. I should draw the caveat that normally I would not buy something that's overbought like this. You see it's dipping up. This is going the wrong way. I want to be buying it when it's dipping down. But when you have a time frame of an earnings date in front of you, that trumps the overbought, oversold. Okay, the other way to look for stock ideas, in addition to the stock discovery engine, is by industry group. We sort by industry group, showing you the 64 industry groups where we rank the stocks in those based on the power gauge ratings. And Zacks puts out these uniform industry groups, which everyone uses. We just rank them based on a proportion of power gauge, positive to negative power gauge rating. So you can see here, oil, coal, paper, business, banks, investment brokers, construction building. There's Lennar and DHI are up in the top percent. So if you like a certain industry group, you can drill down into it. For instance, building products, you could look at the 20 stocks that make that up. However, I prefer to use a third way that we offer our clients, and that's to use the screener. The screener is this incredible invention we introduced, I guess it was almost 2 years ago. But what this allows you to do is to put in your criteria and screen for stocks that meet that criteria. And by going into stock universe at the top, as you can see, you start out with a universe of 5,000 stocks. If you request only stocks in the strongest industry groups, it'll give you only stocks that are in the top 20% industry groups. So you don't have to flip through, the 20 construction stocks or the 22 building stocks if you want those industry groups. You just say, hey, give me the strongest. And I started out at 5,000 literally in seconds. I get down to a universe, of 20 in this example here. There's certain factors that I find relevant to screen with for pretty much all the time. However, in earnings season, I'll put earnings factors into this little chart. And then for the classic bull, I want strong money flow, strong relative strength, and obviously a strong bullish power gauge, bullish power gauge rating. So you can see, like in seconds, I go from a universe of 5,000 to a universe of 20 stocks. I do this every week, and this is part of my kind of 15 minutes a day that once a week I'll run the screener. I can save those sorts, so all I do is flip to the my screener kind of screen, and I don't even have to enter what I just showed you. It just pops into the screen automatically, and all I hit is screen. So literally in 5 seconds, I've got a list of stocks. So you can see here on 12/27, I ran it. I got 2. Took 5,000 stocks. It gave me 2 candidates that in the mid and large cap category that met those criteria. So LPL Financial, LPLA is the code. Was one of this has been on my screeners since early September. It's been on there a long time. So I've been having it, I keep it on my watch list. I flip through my watch list every morning, looking at the bullish and the very bullish stocks, looking for an opportunity to buy if I have the money to buy something. But I dropped the earnings component down here for you, just so you could see, because I know they're reporting in a couple of weeks, February 1st. And their earnings component is a little bit neutral to the bearish side. Earnings surprise, which is a very predictive factor in determining how the earnings report is going to go, is very bullish. So that gives me confidence that they're going to beat coming up when they report in February. Now, I bought this stock back here in October. Here's this little triangle again, the money flow buy signal triggered, and I bought it back then. So this has been a good solid stock that I've owned for a couple of months. And I will definitely, keep it until and through their next report on February 1st. Time. Who has enough time to do everything you want to in a day? Cheryl gave us this testimony actually before we even had the screener. So I know even now she's even happier, using that screener. It's an enormous time saver. It really crunches the numbers for you very quickly, and just gives you the, in the case of that screener, 2 stocks. Makes the decision work much simpler. Okay, timing. Okay, this is the big one that you all said was your biggest challenge, and I see that we're kind of at our time, but is it okay if I keep continuing? This is being recorded, so those of you who can't stay on will get the recording tomorrow to watch the rest of it, and if you can stay for another 10 minutes, I can wrap this up in 10 minutes. So we don't have a poll question on this, but if you could just chat into your Q&A if you want me to continue and go through this section, it'll be about another 10 minutes. Continue, please continue. Yes, yes, yes. Okay, great. Thank you. I will continue. Okay, I've been pointing out the buy signals and the sell signals, and Joe and I have been pointing out the overbought, oversold. These are 2 really important indicators that can help you with timing. So how do you know? How do you know when those have been triggered? How do you know when a buy signal has been triggered? Or how do you know when a power gauge rating has turned bullish or bearish on a stock that you're watching? Well, we have what we call an alerts view, and it's this circle here of this little bell here. And you can overlay this on any of your lists. Now, I keep 2 lists. I keep a list of my stocks, which is what you're seeing here, and my watch list. These are stocks that I'm obviously watching. I overlay this every morning. I overlay the alerts view on both of those lists, and then just scroll through them and see what's changed. This will point out buy signals, sell signals, power gauge rating changes, earning estimates. Like today, there was on Lennar a analyst estimate change. It popped up in my alerts view. So these are really valuable ways to point you towards actionable information that can impact the price of your stock. So let's drill down. You can then, by clicking on here, you drill down to the actual screen. Reinsurance, this is a stock that I already own, and I bought it back here in August. But here again, you can see this buy signal that's been a relative strength buy signal that was triggered back when that alert was taken in, what was it, December? Let's see, it's just December. Yeah, so back December 27th, this relative strength breakout signal, and that's what is circled here. So if I mean, this is a stock that I own, so I'm not gonna buy it again, but it's confirmation that this is a good stock to stay in. It's telling me relative strength is going to be kicking in here, and the stock has accelerated in price. Now, this also is going into earnings the end of this month, January 29th. And the last 2 quarters, I can see that they've beat. 3 ago, they disappointed. You can see it dropped down, and back further, it beat again. What's going to happen in January? Well, the earnings component is very bullish. Earnings surprise is very bullish. That gives me confidence that they're going to beat. And power gauge rating is strong. Relative strength is in. I'd like to see this money come in. And you can see that's probably why it's gone sideways the last couple of weeks. Once this money kicks in as positive, I'll see this price escalate. And I certainly hold it going into earnings with the anticipation that it will beat again. Okay, I have certain sell rules, or guidelines. Let's call them guidelines. This is an art, not a science. But if you can use these guidelines to guide you, I think you'll find it enormously helpful, and your trading and investing more profitable. So there's 2 instances when I sell. I either take a profit or I sense the stock is breaking down. Let's break it down and look at the 2 kind of scenarios. So when taking a profit, the guidelines I use are when that price hits that upper volatility band, which is the kind of that channel. The price stays within this kind of I'm sailor, so I call this a channel. I think of this as, staying in the right water. If you get out of the channel, you could easily run aground. When it goes above a volatility band, it's not likely to stay there. Although the market has been so bullish lately, some of the stocks do kind of consistently stay up there for weeks, if not a couple of months, but that's unlikely. It's more likely it's going to pull back into the channel. Price is overbought. We've been looking at that all along. That means it's peaking up instead of dipping down. That's a great time to sell it because that's at your optimum, zigzagging up edge. Or it spikes up after a strong earnings report. As I've told you, I love to take positions on stocks right before they report, ride the spike up, take the profit, and say thanks very much. So let's look at a couple of examples. So Huntington Ingalls. This is a stock I bought back in October at this triangle here, this money flow buy signal. And I knew they were reporting. I was looking at the history. It looked pretty good to me. I dropped down the earnings component, as I showed you on a few other stocks. All looked very positive. So I was confident that this stock was going to beat. And they reported November 8th, and they shot up 10%. And as you can see, it went way up above the upper volatility band, so it's not likely to stay up there. And I said, great, I'm going to take my profit. Got out at 251. I was in at 230, and I made a quick 10% profit in 2 weeks. So that's what you can do. That's how powerful this information is here. And you can see that it did correlate with an overbought position, which means it's spiking up. Think of that Wykoff chart. It's spiking up. And you could make a quick profit, which is exactly what I did. Okay, another example. this is also taking a profit. This is Senta. This is a little known small cap stock. They sell pet food and lawn care material. And I've owned it kind of in and out for a couple of years. So this was on my watch list. And I bought it back here in September when this relative strength breakout signal triggered. And it was oversold at the same time. Power gauge was positive, relative strength, money flow, everything lined up. So I acted on this breakout buy signal and bought it at, where was it? 30, I think. Yeah, this was, sorry, the prices are off the margin, but this, I bought it at 30. And then you can see a few months later in December, it spiked way up again above that upper volatility band. And it was about a week or so after they reported earnings. So I said, oh, this is a great time to get out. So I actually had bought a second position on this second buy signal. So I had two positions on this, meaning like double the normal investment I make, because I was so positive they were going to beat on earnings, looking at the past history, and they did, and I sold it up here. I made a really nice profit in a few days, a few months from September into December. One last example of when to take a profit is Apollo. This is a stock that's on my watch list, was on my watch list. Again, I got the alert back in September. There was a momentum breakout buy signal. I bought it. It was oversold. Everything was green. Held on to it. Now, it went up above its upper volatility band here in December. And you can see money flow was just starting to tick negative. And I thought, well, this might be a good time just to take my profit. Even though power gauge, relative strength were green, I thought, take my profit, be content with that. So I did. I sold it at 33. I took a 10% profit. And I thought that was fine. But, the stock continued to go up. And this can happen. So that's why I say it's an art, not a science. And now I wish I owned this stock now. I wish I hadn't sold it, but I did. So I put it back on my watch list. And now when I get a decent pullback, I will consider buying it again. And I did, ironically, trigger a momentum breakout buy signal today. So that's exactly how I bought it back in September. And again, it triggered today. But, it's way up above this upper volatility band. I'd rather wait for it to pull back a little bit. But that's I wanted to give you that example. It's not always black and white. There's a gray area in there. And sometimes you wish you hadn't sold it, or, you feel you sold it too soon. But that's just, you can't be 100% right all the time. All right, so the other scenario of when I sell is when I sense a stock is breaking down. Power gauge, and the guidelines here, if the power gauge turns neutral and another indicator like money flow or relative strength turns negative, that's time to take a really close look. Certainly if I get a sell signal, one of those little red triangles, or the price drops below that orange line. We haven't explained that, but that's like a 200-day moving average line, or certainly below that lower volatility band. Again, that's the kind of the channel marker band here, and this orange line is the 200-day moving average. All right, this goes back a year, but it's still the best example I have of anticipating and a breakdown. I bought this stock off this chart. It was last December. It was actually the December before that, December of 2016. I bought it at 16 on a momentum buy signal. And the stock went up nicely. It's insurance. It was strong industry group, still is. And I sold it 2 months later at this green arrow. Unfortunately, the 1 year and 5 year little navigation button here is in the way, but the stock bumped up against this upper volatility band, this zigzag line up here. And I thought, I'm up. I've got a really nice profit. I've got a 17% profit. Money flow was just starting to tick red, and that's why I was so sensitive with Apollo. and sold Apollo when money flow ticked red. Whoops, here. So I sold it, and oddly enough, like 2 days later, they pre-reported. They weren't due to report till like a week later, 10 days later. But they reported, and a disappointed outlook, and the stock dropped 10% when they pre-reported. They reported a week later, it dropped another 10%. And then you saw things starting to deteriorate. Power gauge turned neutral, relative strength, towards the end of February turned negative. And you can see the money flow stayed negative and went persistently negative. And then look what happens with the price. I mean, it really is pathetic. It goes from, I've sold it at 1872. It's down now to 740. It's gone down over 7. So it's 60% off from when I sold it. And oddly enough, when you're looking at this is today's chart, it was up 13.85%. I don't know why. We have news stories down here that often give you a clue. If an analyst raises their estimate or something like that, it'll show up down here, and it can be helpful. But I didn't see any news on this. But that would not encourage me to buy this stock. So despite a nice, there's green money flow now. It ticked it for a few days to green on the power gauge rating, but this is not a stock I would ever buy back. It could be an opportunity for a put option, monitoring these sell signals and these levels of hitting these volatility bands, but this is not a stock I would invest in for the long term. All right, so one last testimonial, and Joe, I know you know Norm too, so maybe you want to deliver this testimonial from Norm.
Yeah, no, absolutely. So, I think that I'm noticing the key word in in this testimonial. I think there's 2 of them really here. Obviously, the first thing in the headline there, methodologies, excellent methodologies. That's really, really, really critical. And of course, love the little plug for tremendous service as well. But beyond,
that's you.
Yeah. Well, especially the methodologies, though. Obviously, with the platform itself is fantastic. Using it the right way, though, is how you'll be successful. Before Chaikin Analytics, how to make money and then lose it. So you have your winners, you have your losers. I'm sure each of you have been on both sides of that. The key thing is having more winners than you do losers. And then that other word I really liked is consistent. Consistent earnings were really just not a reality for me. Chaikin Analytics has changed all that. Can't thank you enough for tremendous service, excellent methodologies. So we're, again, very, very proud of this. And again, just emphasizing a strategic approach for the way you use the program. And you can see just how easy it is to understand our analysis. You saw the charts tonight. And I'm really, really excited to get to work with you guys to, again, get a great, successful methodology in place for each one of you.
You're all revved up, Joe. Yeah, I can hear your excitement in your voice.
Yeah.
I know, it is fun. Okay, so let's recap. 5 steps to winning stocks, and then once you know the direction of a stock, you overlay that option play on it, on top of it. But you first have to know the direction of a stock. So you start with tools you can trust. For us, that's the power gauge rating. Then you go on to what to buy. That's the classic bear. You've got to identify that classic bear pattern. Timing, buying strong stocks and strong industry groups, and that's where, how do you find these stocks? Well, the screener, the stock discovery engine, and our industry group sort are ways to help you do that. And timing decision secrets, when to buy and sell. That's the kind of all, whatever we all have the biggest trouble with, of knowing when to buy and when to sell. But following these guidelines that I pointed out this afternoon, I think will help a great deal. And ways to avoid those pitfalls or identify those loser stocks. So in the beginning of this presentation, I made a promise to you that I would show you how to predict where a stock is headed and how to create high probability option strategies. And I hope Joe and I have delivered on that promise. And again, this is also that you can make some money and celebrate and enjoy your life and celebrate your winnings. and enjoy yourself. The platform, as Joe and I have been sharing with you, has been what we call the Financial Freedom Fast Track, powered by Chaikin Analytics. And we have won an award by Benziga this year for the best stock idea platform. And I think that was certainly based on the stock discovery engine that we launched, as well as the screener. With those two tools in hand, you really can zero in on stock ideas, whether they're on the long side or the short side. So the analytics comes packaged, obviously, with the 20-factor model, the power gauge rating model. The stock discovery engine is in there as well with no extra charge. We have bonuses of a screener, as I showed you, and Joe's been sharing the options overlay from Options Play, which gives you, clear-cut examples of exact strategies to play. We usually sell the subscription for $2,195 a year, but we're taking $300 off for a webinar special. But if you'll stay with me, we sweeten the pot a little bit more. We added more free things. The one-day chart, I think I showed you that on Lennar, so you can watch the price in real time on any particular day. The earnings drop down, which is incredibly helpful for predicting when a stock, not only when a stock is going to report, but whether it's likely to beat or miss. And the market insights, which are Mark's weekly commentaries that he sends to subscribers with specific stock ideas. And all of the ideas that Joe outlined today were from Market Insights. So, I mean, you don't have to go and research them yourselves. Many people just use Mark's ideas and trade those ideas and are very happy to do that. One thing that I like to point out is something that we offer for free that I think is pretty remarkable, if I do say so myself. And Joe and his team are there to support you. We call them our customer support representatives. And that's exactly what they are. Customer success, excuse me. They are tied to your success, and their whole goal is to make sure that you are successful. And to do that, they set you up in small group tutorials, as well as unlimited coaching and support and unlimited one-on-one coaching. And this is all bundled into the subscription price. So when you subscribe as early as tonight, you'll be into a small group tutorial tomorrow. And as Joe said, he's even doing a second session tomorrow on options if you wanted to get in on that one as well. So you'll be up and running by the end of the week and able to start your investing using Chaikin as early as Monday. Jim Craver uses our stuff. He gave this to Testimonial back in October at a live conference where Mark presented in New York. And I promised you an extra sweetener to the pot. We'll take an extra $100 off when you subscribe by midnight tonight. So I thank you all. I'm sorry we ran over a little bit, but I hope you found the content valuable. And Joe, I will turn this back to you to close the session.
All right, awesome. Thank you so much, Sandy. So again, for Sandy's offer here is $17.95 for a full year to Chaikin Analytics, complete year's worth of access. That's access to our platform, to the support webinars that we mentioned. Tomorrow, the options session that Sandy mentioned that I'm hosting, it's going to be all about finding ideas. And obviously, we're going to give special focus on earnings, given that we're right on the cusp of earnings season. But these are sessions I host twice a week. Another one of the webinars I would greatly recommend that you check out as a new subscriber, of course, is our onboard session. This is where we're really going to cover the basics. We're going to show you how to create lists, how to navigate through the program, show you some of the other ways to find ideas, and really just kind of get your feet on the ground and hit the ground running, really. So what you're seeing right now is the checkout page. I sent you all a link to this in the chat room. It's go right to chaikinanalytics.com/Sandy. We're going to stick around a little bit later after the webinar if you want to give us a call. I'm sure there were some stocks that you'd like to take a look at. Give us a call. We'll be happy to show you what they look like. You can reach us at 877-978-6257. But yeah, aside from that, again, a full year's worth of Chaikin Analytics, $17.95. Give us a call, 877-978-6257. Go to chaikinanalytics.com/Sandy. You'll see this checkout page automatically preloaded. Until then, we want to thank you very much for joining us. Keep an eye out for the recording of this webinar. We're going to email it to you tomorrow. Until then, have a wonderful day, and we will see you on tomorrow's option session.